I hope everyone's been well. It's been a while since the last episode, so I had to make sure that today I'm back with a serious bang. And I've got, a very special guest, a guest that's quite different from my previous guest. You've seen a lot of traders. I'd like to introduce Matt, the CEO of MyFundedFX. How are you doing, bro?
I'm doing great. How are you doing?
I'm doing good. So now I'm hoping a lot of people that are listening do actually know who you are. I've seen MyFundedFX all over my timeline, all over my Discord. It's a very, very active brand. It's starting to become somewhat of a household brand on my timeline, and that's very good to see. So, you know, we can start with My Funded FX, the actual name, the idea. Where did all of this come from?
Like many prop firms out there, they originally started with someone who was also in the trading community or trading businesses as a whole. I'm no different. I wouldn't consider myself an influencer because I'm not, but I do have other businesses within the Forex and the options and the stock market industry that the original concept behind my funded FX came from trying to vertically integrate some of my business offerings. So I have a product or a business that sells indicators and courses and teachings. I also have one that sells the copy trading software for Forex brokers to use and individual retail traders to copy their accounts. So the whole concept of my funded FX was born out of the fact that I wanted to vertically integrate my businesses so I could own the kind of base level education. I could own the prop firm and the funding, and I could also own the copy trading side of it as well. So that's kind of the original plan behind it. And so that's kind of how I started.
Yeah, yeah, that sounds good. So you've essentially got, a big hub in several different categories of our industry, of course, with the education and now with the prop firm and the other things you're doing. That's quite interesting because with a lot of the other prop firms, they seem quite mainstream. They don't really have a lot of branches. Um, and I think that is a big reason why my funded FX is growing so fast. You've delved into so many things. You engage with your audience so much, and that's not something you really get from the other companies. So of course, people are loving that. So you spoke about, obviously a lot of people going into prop firms will have a trading background. So where does, your trading journey, your trading experience start from? How many years ago? So how did you get into this large industry?
Absolutely. And like many, I being in the United States, I'm from Dallas, Texas, 26 years old, soon to turn 26. But I started about 5 years ago, and like many of us in the United States, we started out with stocks. So stocks and options were kind of my thing in the beginning. I originally was an investor in kind of mid to long term equities and ETFs and et cetera, just trying to kind of learn how the whole investing community worked. Got into options where you were trying to be more of an active trader. But like many, I was using technical analysis to kind of create my trading strategies. Now, the thing that got me into Forex specifically was I was more of an indices trader. I didn't have a ton of money at the time, so I wanted to kind of take efficiencies, economies of scale with the leverage that Forex offered. So right now, I'm pretty much only a NAS and a US 30 trader. So I wanted to get that leverage impact from the Forex market. So I got into Forex about 3 years ago. Didn't have too much time to do it full time, but I did get into it for a little bit of time, and now I kind of run the businesses and I trade on the side. Um, but for the most part, my journey started with stocks, options, and then kind of trickled into Forex. And since then, that's kind of what I've stuck to.
Yeah, that's quite interesting. With I think a lot of the American guys on my timeline and the American traders that I know, they do all come from stocks. And I don't know why. In the UK, that's not a thing. In the UK, you just see it. I
Yep.
think a big one is gold. A lot of people trade gold, and of course, the main pairs Euro USD, GBP USD most of the time. So of course, you went to trading 26. That is quite young. Of course, I didn't know your age. I thought you were gonna say older. But of course, you do have a lot of experience in the field, as you said. In terms of like going to college and things like that, did you really pursue a career in anything else before, you decided that trading is the one thing for you?
Absolutely. I did. I graduated with a degree. My background is in technology, so information systems. I graduated from a school in the United States called Texas Christian University, TCU. People probably know it just from the football game that just happened in the United States, but outside it's probably not as known. I did graduate with a degree in information technology and information systems. So that's actually what originally got me into the whole trading world in general, was just the technology behind like the algorithms that are associated with these large markets, whether it's market makers or if it's broker technology or anything of the like. And that's kind of what initially sparked my interest. But that was my background. That still is my background. Very passionate about the technology that goes into the stuff, specifically within the prop firm space because it's very sophisticated. So.
Yeah, yeah, that sounds good. It goes really hand in hand with what you're doing now. So it does make a lot of sense that you came from that sort of sector. You mentioned algorithms. I do see a lot of debates about this on the timeline. Consistently people arguing, is there algorithm or algorithms, working in the markets? It is a big debate, probably one that will never end. Some people have to, just agree to disagree.
Right, right.
Now, now that makes me think you're familiar with ICT. I have seen you mention him a few times. So is he sort of, pivotal in your journey? Did you learn from him or?
Yeah, absolutely. ICT is I personally trade his concepts myself. He's a very controversial person, and it's a controversial topic. It will remain controversial for the remainder of the trading world. I think of algorithms in a different sense, though. I think of if you're placing orders on the market, buys, sells, whatever, how does the market actually take those orders and translate it into movements on in the market, like the volumes that are associated with it, the price movements, and where those orders are taking place. So you can have a strategy all you want, but I'm more so interested in just the technology side of that. I think ICT was a pioneer in terms of creating the design for retail traders to understand, so it's a lot more logical to watch his videos and learn how he's teaching things and how he sees things, regardless if he invented these concepts or not, or if he programmed the algorithms. It's more so about how you can understand what he's talking about. But yeah, I absolutely I believe in a lot of what he says. I think there's some serious truth into the technology that he's talking about behind the scenes. So I'm absolutely a believer. I continue to trade his strategies, and I recommend people doing it as well.
Yeah, yeah, that's great. I also do trade, ICT smart money concepts. A lot of my own friends do. I do have my own group, and that is exactly what I teach in there. I agree. He's definitely a very, very big pioneer. The sort of teachings, he brings into space, there's a lot of logic and, whatnot behind it. So in regards to, all these trading methodologies and sort of, the way the strategies people are using, do you guys ever look at that for the people that sign up to your platform? Is there even a way to, sort of know who's trading what? Because, when somebody, of course, does a very high percentage in a month, that sort of probably catches your eye. So do you guys ever go over those trades for that person or try to understand what they were doing?
Absolutely. And to be honest, that's 90% of what a prop firm is operationally speaking, right? We're trying to use their data to determine whether they're a likely candidate to copy trades to be a successful trader for both themselves and for us and to cover our risk, or if they're a person or a trader that has gotten through phase one and phase two just by luck of the draw or statistics or some other form of trading, and that their funded account, they're likely going to blow it. So we have pretty advanced algorithms and systems, and I'm not going to say it's machine learning or artificial intelligence, but it's monitoring programs that will identify what types of strategies you're using at some capacity, right? Like we can tell if you're a martingale trader, we can tell if you're a grid trader, we can tell if you are a over leveraged or under leveraged trader, we can tell the average risk you use. All of these factors go into us helping to determine if we trust that you are going to be a successful trader, right? Because that's a big thing.
Yeah.
One misconception here is that traders, so for example, I'll give you an example. If a trader trades and makes 10 grand using the 80-20 principle split, we would make 2 grand, you would make eight, right? Now, if you lose, and let's say you lost based on a 10% drawdown, we would lose and be susceptible to 10 grand in losses. So the
Yeah.
risk reward associated with copying versus not copying is heavily skewed in the prop trader's favor. So that's why we have to use these strategies to help determine like what how much we should copy you and to what extent we should as well.
Yeah, yeah, that's quite interesting. So, in regards to that, right? So, I'm assuming initially, when a prop firm is new, when you get started out, of course, you don't have as many members, as many customers. So, how long into, sort of making my funded FX would you say you started, picking up on other traders and starting to copy them? Because I guess in essence, now that you have grown, that is probably a large part of your business. Of course, like you said, all this data that you're studying and looking at. So how far into creating the prop firm, did that take you?
Absolutely. That's a good question. And the first I would say the first portion of a prop firm's life is the most vulnerable, right? Because you have this concept of economies of scale. If you have 100 people sign up, then statistically speaking, you're less likely to align with what quote unquote the industry averages are, or the fail rates, or the pass rates, or the profit average profit payouts, etc. If you have 10,000 customers, then the statistics will likely be exactly what the industry makes it, right? Now, if you have 5 or 10 traders that at the beginning of the firm kind of blow up and make a ton of money, or they blow their funded accounts and you were copying, then that makes the firm pretty susceptible to failure, right? So that's why you see a bunch of these firms that start with good intentions, maybe, that
Yeah,
make a couple bad decisions, but ended up having to pull the plug because they didn't have the capital, right?
yeah,
Not that they were trying to scam, but maybe just because they had poor business decisions. So the way we thought about it was we're not going to take a profit the first 3 months, 4 months, whatever it is, 2 months. It wasn't exactly a timeline, but we knew we weren't going to be able to predict the copy trading to what we were hoping to do to be able to profit. Right now, once you get onto that 3, 4, 5, 6, 7 month time frame, which what we're at right now is about 7 months, is now you actually start to understand who's consistently profitable, what strategies are profitable, who's using the right risk rewards, what kind of money management techniques they're using. So I would say up front, that first 3, 4 months was a little bit of a learning curve, and a very unprofitable period, but it's really an investment in the long-term business, if that makes sense.
yeah, yeah, definitely. That does make sense. With trading, it's sort of an industry where people won't stop coming at you. And even with prop firms, I guess there's a sort of hype around them, and people are always looking for the next prop firm, the next one to
Yep.
come out and put out better offers. And my funded FX have really done that. One of the big things you guys done that a lot of prop firms don't do is do giveaways. And you don't see that too often. Of course, some of them do. They have, challenges and whatnot. And with all these giveaways, was your idea behind it, the sense of marketing, getting, people in? Of course, I know that's a factor, but when you were doing that, right, and you're giving these accounts away, did you really, go into it thinking you're going to bring a lot of people in, or was it just something you were just playing around with or trying? Because I do see you guys try a lot of new things. So it'd be good to hear, what's successful, what's working for you, what's, kind of actually brought you customers, what hasn't.
Yeah, absolutely. And I think the giveaways have been a huge component of our success. We really didn't start pushing them until the holiday season. But there's kind of twofold. We do not do marketing, advertising spend on traditional platforms. We don't have Google ads. We don't have Instagram, Facebook ads like most
Yeah,
firms. We wanted to go the more kind of relational approach, right? All the influencers on Twitter were more than happy and willing to give away accounts to their communities. It helps them because they get a following, they get reactions, they get followers, and then we also get a huge boost from the brand awareness. Now, you kind of think about it as ad dollars, right? If I give away a $10,000 account, there's associated spend with that. Now, the truth is that accounts that are given away, the actual participant is much more likely to fail the account than they are if they purchased, right? And it's basic psychology. If you've got no skin in the game, then you're more likely to take risks.
yeah,
If you're more likely to take risks, especially on a challenge account, then you're likely going to fail. So it's a low cost, low risk, high reward way to market directly to people, and I think it's the best option holistically to do. If it wasn't too cheesy, it wasn't too corny, I would do giveaways every day because instead of spending money on ad dollars trying to get people that don't care about us, I
Yeah.
can directly communicate and work with people who do.
Yeah, yeah, that's definitely true. And the way you do set up your giveaways, of course, telling people to retweet, share, that word of mouth goes a long way. And of course, I messaged you initially, I believe, on January the first day of this year regarding the podcast. And just a little bit before that, we'd spoken as well. And I just remember you having, a few thousand followers, maybe. I'm not sure exactly how many, maybe three, 4,000.
Absolutely.
And it's literally been about 3 weeks, and I believe you're very close to 12K if you're not already there now. So that growth is, like very big, especially on Twitter. And on Twitter, people are very interactive. So of course, I'm sure it goes a long way. So in terms of, that growth that you've seen on Twitter and your social presence, have you seen a sort of equal growth in terms of your customers, the people that are actually engaging with your firm on the basis of, buying accounts and trading them?
Yes, absolutely. Twitter has been a direct correlation to our success and our growth the last, I would say, 60 days. Our Discord is now at 14,000 Discord members. It has grown 4,000 in the last month. Our website traffic has absolutely just expanded by 2x based on Twitter feed and Twitter traffic. Now, what that's done is that spread our brand so that now we don't have to rely directly on Twitter, right? Now we have the brand recognition, we have the Discord members. And so now this traffic is starting to come from other Discord groups who have heard of us, who have recognized our very competitive rules and our very friendly, social, supportive atmosphere from our staff who is always there to help you. So Twitter has definitely provided a huge, huge, huge boost to our brand, and I think that's being carried throughout the rest of the kind of trading community. So we'll definitely be pushing Twitter hard, but other areas we'll also be investing some time and dollars in, like YouTube. We haven't really put too much time into, but that's coming up next.
Yeah, yeah, that sounds good. Yeah, definitely. Twitter is a big one for traders. Twitter is where literally all of the traders are. If you search a few catchphrases in the search bar, if you've ever done that, you type in ICT SMC, you will see
Yep.
tweets flowing in every second. People are trading every single session, posting charts on Twitter. It's very crazy. So of course this growth is great, and it's great to see even from my perspective. You guys are growing very fast, and the people seem to love you because you do engage with them a lot. Now, I know that you run the Twitter by yourself, and in regards to the other socials, do you do that by yourself? And this growth that's happened, is that sort of, now starting to stretch you thin? I think literally today I saw that you guys are hiring new people. So what's the whole, process behind handling this growth and expansion that's come in?
Absolutely. And we are growing. We have about 12 employees directly associated with the business. And then we have some people that work with the technology and then some kind of contracting work, but we're still on the small side, obviously. And yes, I am spreading myself thin, but I'm also kind of realigning where my time is most valuable, right? People want to see my thoughts. They want to see interactions. They want to hear from me directly because that builds that kind of sense of trust and that relational approach to what we're doing. I'm going to have to kind of transition some of my time away from the more menial tasks, obviously, which is something that it's probably going to happen regardless. But we are expanding. We are looking for more support staff that are there to join the team. But yeah, I do plan on sticking with the Twitter. I enjoy it. It's fun. I love interacting with the rest of the trading community and the other influencers, and I think that's something that I'll stick to. But hopefully, the new tasks or new staff members can pick up some of the other tasks that I'm working on.
Yeah, yeah. So you mentioned, at the moment there's 12, of course, let's say main staff in regards to MyFundedFX. When you started out, did you start out with these initial 12 people, or was it just one man with a plan and you were just going at it?
Yeah, so it's me, Dex, who is in the Discord. He's been with me in some of my other businesses since the beginning. So he's kind of like my right hand man, go-to guy. He helps me run things. He started out with myself and then two other individuals. So it was four of us at the beginning. But obviously, if you're a small prop firm with a very little footprint and very little to-dos, then it's easy to run like that. But we quickly realized we needed to expand. And then with every kind of next level of growth and new engagement, new reach, new brand awareness, we kind of have to add members. I think we do have a little bit more ticket and support inquiries based on our lack of automation in the back end. But that will be solved in the next couple weeks when we're rolling out some more automation initiatives for account reviews, document reviews, stuff like that, to make it a whole streamlined process for customers, so they don't have to actually reach out to us for everything.
Yeah, definitely. That would make your lives easier and easier for the customers as well. I think that is, a big thing with you guys coming into the market, and in a way you're still relatively new and now you have a footprint. But, people always have this sort of stigma around a new prop firm, which I think is very valid. There are definitely prop firms that have just gone into the ground. They come for a month, then they've gone. So I guess that kind of takes us back a few steps, right? And if we talk about when you started out the prop firm and you have that, sort of lack of engagement, what were you guys doing to try and get people in? Because it's very hard to, build trust. People are investing their money into accounts. They're probably very scared they're not going to receive a payout. They've heard a story on, Twitter, Instagram, wherever someone bought this prop firm and now they've not paid out. You've just lost XYZ. So how did you guys kind of go about that, trying to initially bring customers in and getting them to trust you?
Absolutely, that's a great question. I want to start by saying that yeah, there's a ton of prop firms that start and leave for a variety of reasons, whether malicious or not malicious. And the reason that is because it's very easy to get a decent sum of capital through sales, especially if you're an influencer, right? If you have a big Instagram following, you can start a prop firm with using a technology provider, drive sales to your prop firm, make 50 grand, and then leave. So those kind of situations have created this stigma, whether it's good, bad, indifferent, lies, truths, etc. So that's why people are concerned. So the approach that we took was try to be as transparent and open as possible. We wanted people to know who the owner was. We wanted people to know where we were based. We wanted people to see my face on videos. We wanted the legal documentation for our registered licenses associated with the business to be easily accessible. We wanted to be transparent about A book versus B book versus statistics. So if you go to my YouTube channel, you'll actually see videos of me walking through our past fail rates and reasons for failure. So you can actually see how we operate as a firm. You can also see a video about our back-end technology where I show how we copy trade, what are the criteria we use to copy trade, stuff like that. So our approach was to be literally as transparent as humanly possible. All of these stigmas and the quote unquote kind of falsehoods of the prop firm industry, we were open about them. And I think that honesty and that transparency, whether it hurt the industry as a whole, was really what kind of pushed us above a lot of our competition who was also starting out, because they knew who we were, they knew we were open, they knew we like did everything by the book. And so I think that's really what pushed us as fast as it did in the first 4 or 5 months.
Yeah, yeah, I agree. That transparency is a big thing. I have seen you say previously, when someone or a few people find out that you're running the socials yourself, they went and called it a scam for some reason. They thought that the CEO can't be running the Twitter and the Discord and whatnot. I sort of understand. I guess conventionally people won't look at that as, let's say, quote unquote, professional, because it's not something you see, like you said, there's no one else out there doing that. But someone has to do it first for it to, sort of become a thing. And you've kind of been that first person. So I agree. It's probably taken people a little bit of time to warm to it, but people are most definitely warming to it now. And like you said, your engagement with the Twitter followers is a prime example. So in terms of, transparency and stuff, you mentioned the back end, and just the FYI for anyone listening, I will link Matt's YouTube channel below if you're listening on YouTube, so you guys can go check out everything he's mentioned. But the back end and the brokers and stuff like that, if we speak about that, I've seen recently you got a new broker. So what was the sort of decision behind that? Why was there a broker change needed? How does that process work? Because I feel like a lot of people in the space probably hear that, but they don't understand what's actually happening behind the scenes.
Absolutely. Brokers, so there's two types of firms. There's the firm that has their own in-house license. That would be like an E8 funding or an FTMO or a My4X funds. They have their own broker license, right? They have their own MT4, MT5 license. Then there's firms like myself, like the Funded Trader, Funded Next, all of those. they use a third party brokerage like an 8 cap or an IC Markets or something like that. The people who create and control their own brokerage, they have more flexibility. They have more control over certain things like spreads, leverage, asset control, tickers, stuff like that. Whereas myself and anyone who uses a third party has a little bit less control, right? With the foreign exchange clearinghouse, that's my current brokerage offering. They do not have MT5, so that is a big kind of thing that we wanted. The other thing is they don't have stable spreads like other brokers in the sense that you can't have a fixed spread. It's all floating. That's something we want to ultimately create is more stability in the spreads. We also want to create more stability around times when there's high volatility, so like news events. Our current brokerage providing was just not meeting the mark in working with us on fixing some of those things. So we've switched our liquidity providers for that brokerage, but it just really wasn't meeting the mark. So now what's going to change is we will be switching over to 8cap. They'll be providing our MT4 and MT5 accounts for all of our customers. And what that means for a customer is not much. It just means you'll likely get better trading conditions, you'll get better spreads, you'll get hopefully better fills, lower slippage, stuff like that. What it means for us is now our monitoring, our technology, and our infrastructure is going to hook up to an 8cap MT4, MT5 manager terminal. So that now we can create accounts, we can monitor the accounts, we can breach the accounts and send emails. So not a lot's going to change on the customer side except for the trading conditions themselves. But the broker, ultimately, we just had to change to meet our future roadmap of what we're looking to do here. So
Yeah, yeah, that sounds good. Definitely, having or not having MetaTrader 5 is definitely a big thing. It's a large platform. Sure, a lot of people use that. So you've mentioned now your sort of roadmap, let's say, and the things you have planned, right? So before we talk about what you want to do in the future, the first question I have for you is when you initially made MyFundedFX, and as you mentioned, it's been about, 7, 8 months since you kind of, I guess, got into it properly. Did you sort of imagine that you'd be here now, growing as fast as you are, or, hitting certain milestones that you've probably hit on the way, or did you think you'd be further maybe?
absolutely, and I think I didn't know as much as I did now. Like when starting out as a prop firm, I knew a good amount just on research, talking to people, experience in the industry myself, but I didn't truly know the intricacies of running a prop firm in this industry in this time. It's we could have a 5 hour discussion on a prop firm politics and logistics and stuff like that. Um, but I mean, ultimately, a prop firm is kind of a conglomerate of certain things, technology and funding and capital, et cetera, stuff like that. I think the biggest thing I didn't realize is truly how big the prop firm, kind of like the whole pie, right? Just based on our revenue numbers, our copying numbers, and then some of the big guys out there, like the FTMOs, the My4X funds. The prop firm revenue on a yearly basis has to be 700 million up plus. That's just based on my chicken scratch math, using a variety of things, but I truly didn't comprehend how big the prop firm industry was. So that's kind of my biggest takeaway here. I think we grew pretty slowly in the beginning, like most firms do, but I did not expect to see such growth, kind of the trajectory of growth so quickly after that first initial hump. So hopefully that answers that.
Yeah, yeah, definitely. I think, it's probably a similar route for all the others. And I guess the way I can imagine it working is once you have a few people getting payouts, sharing those payouts, telling other people become interested. And especially with, the way you run your socials and you do the giveaways and whatnot, this, when it rains, it pours sort of scenario. So I
Yep,
guess it just kept going for
absolutely.
you guys. So 700 million is actually an insane number. That's probably not what I was thinking in my head if you asked me that. With that number, most definitely I think it will grow. The whole concept of prop firms, you know, although a lot of people do lose in the trading industry, it's just how it is. But for the people that, are seriously at it and they're going to be profitable down the line, prop firms are a game changer because like you said, even you switching initially when you were, trading before you had your prop firm, going from indices and whatnot, going to Forex to have that leverage. prop firms in a way are a leverage as well because you're paying a small amount to have a very large amount of capital, and that allows people to do a lot. For some people, it is life changing. It can change your life in a whole year. You're familiar with Paladin,
Oh yeah.
and I believe I've seen one of his tweets where he says at the start of the year he bought an account and had a few $100s in his bank account, and he's finished the year with a certain amount of funding. And I'm sure you've seen his certificates. He's absolutely
Yep.
smashed it. So it is great. So when you created this prop firm, what was your sort of thinking behind it? Was it purely this is in essence a monopoly and a money farm? Because if being transparent, being honest, a lot of people do lose. So initially for a prop firm, there's a lot of profit to make until a big trader might come in and request large payouts. But even in that, there's profit for you to make if they prove their consistency. So what was your thought process of initially creating it?
That's a great question, and I think before you come into the prop firm industry or even know what a prop firm is, like the modern day prop firm, right? The old version of a prop firm would essentially be an application process and a training process, kind of like a hedge fund, where you would practice and prove that you could manage money and trade money successfully, but you wouldn't be paying entry fees, right? You would be practicing, you would have an interview, you would have a 6 month training program, and then at the end they would allow you to trade their capital. So that's kind of the old structure of what a prop firm is. The new structure is a bit different, and it's similar, but it requires a fee, and anyone can do it. Anyone can apply. Now, where I think about it is the forex brokerage industry is nearly identical to the prop firm industry, except for one thing. If you go to a forex broker, which 90% of them are B book forex brokers, meaning they are trading against you. If you lose, they win. If you win, they lose. So there's a conflict of interest there, obviously, just like there is with prop firms to some extent. But it's the same exact model in the sense where you are trading with your money. If you lose it, they get the money. It's almost identical to a prop firm to some extent, unless you are a funded trader, right? If you are in a challenge or a verification phase, you fail, the prop firm gets the money. A little bit different in the funded stage, depending on if you're copied or not. But what I always tell people is that you're much better off going to a prop firm because you could try 10 times and lose the amount of money you would lose in a traditional forex brokerage, right? It is so easy to go. Like for me, for example, I traded offshore B book forex broker called Hugo's Way. Now, I loved Hugo's Way. When I first was starting out, I lost a ton of money. Then I started to kind of build a nest egg in my Hugo's Way account. I noticed trading started to get a little bit harder. The conditions got worse, the slippage got worse, etc., because they're a B book forex broker.
Yeah.
Now, the reason you would go to a prop firm is because you get less, it's less risk for similar capital, even if you fail a number of different times. So it's just a alternative to the forex broker. That's why I think the industry is growing so well.
Yeah, yeah, definitely. That's interesting because, of course, there's a lot of new people coming into trading now, especially, this, if they do truly understand the idea of, funding from prop firms, it's quite attractive and, they'll never get to experience these, in a way, these old brokers. Do you think prop firms could, in a way, I don't know, let's say wash them out, you know, push them out of the game or take over? Because of course you said 700 million in revenue. Of course, that is a very large amount. But compared to, all the forex brokers, the stock brokers and whatnot, it's still probably a much smaller piece of the pie. So where do you, sort of see this industry going?
I truly do think that the prop firm industry will overtake a large portion of the unregulated B-book brokerages. Obviously, like the US based or the Japan based, the all fully regulated market liquidity, bank, institutional, all that stuff. That'll be fine. There's always going to be banks that are trading on actual brokerages. But if you're a retail trader looking to go to an offshore brokerage or just a higher leverage 500 to 1 brokerage, I think that ultimately that business, and I think it's currently happening right now, is they're switching to prop firms. There's so many people out there trading on those brokerages that are kind of realizing that the prop firm model is so much better to A, practice on, but also B, potentially risk a smaller amount of money for a larger return. So I do think that the large retail institutional that are actually doing the market moving will stay and they'll be fine. But those offshore banks, those offshore brokerages are kind of losing audiences to prop firms, and they have been for a while.
Yeah, it makes a lot of sense. It's a win-win situation for the customers and the prop firms in this scenario because, as I mentioned before, it's a sense of leverage. You're paying a small amount, you're getting a large amount of capital to trade. So, of course, that's the future of the industry. Now, talking about the future of my funded FX in specific, right? Of course, I personally think, right, you've started to make this big dent in the market, and this dent might not be, very visible to everyone, but I believe it started. And currently, I believe, when people talk about prop firms, the big names that come to mind, the top three, at least for me, the people around me are funded by are my Forex funds, FTMO, and TFF. So do you sort of, have a plan to compete with them, to grow to their size? Is there thought behind it, or is it sort of, just go with the flow and keep growing and you'll kind of just get there one day?
Absolutely, and there's several different aspects to that. I think of the big five instead of the big three, but that's just my thing. I do FTMO, my Forex funds, True Forex funds, E8, and then the funded trader. I think those five are easily the undisputable top five for market share and for product offering and
Yeah,
just overall size. Now, I think we're kind of on the fringe of the next group, which would be like the next seven or so. There's kind of like a tiered structure in the prop firm industry. Now, I don't think more so about like how can I compete against them? Like how can I knock them off their pedestal? How can I take their market share? I think about how do I provide something that's a little bit unique, right? There's like there's rules associated with a prop firm that are very non-transferable, right? There's certain structures to programs that you have to have. So if you're in a two-step program, you're going to have daily and max drawdown unless you sacrifice elsewhere. You're going to have a profit target. You're going to have like these certain stipulations and rules that create what a prop firm structure is. So instead of thinking about how can I get to where those guys are, because our rules are going to be similar, right? It's how can I provide a unique experience, a unique product offering, a unique process.
yeah,
At the same time, there's going to be a point where you are likely going to be funded with multiple providers, right? The reason we have a max capital allocation is so we don't have one person or five people that control $10 million worth of capital, because if they lose and we lose, that's a huge hit, right? There's a limit for a reason because it reduces our risk. So I highly recommend people going to those firms, get funded with them, get funded with us. If you are looking for alternative options to get funded, there's plenty of options out there. Now, the last point here is that every firm has a kind of target audience for traders, right? The
yeah,
firms with larger time to pay out are looking for someone who is probably more experienced, doesn't really mind the no minimum days kind of thing. Whereas the firms with no minimum days are really just looking for anyone that's looking for the quickest payout option, right? There's different desires that each firm is addressing, if that makes sense.
yeah, yeah. They're, sort of catering to different personalities of traders in a way.
Yes, absolutely.
Yeah,
Different trading styles, different personalities, different countries as well. Like you'll notice that we have a $5,000 account option. So a lot of our audience is actually from Africa or Southeast Asia
yeah,
because the US dollar or the euro is very different to them. So they're looking for a smaller, cheaper option. So each firm kind of has their niche for who they're targeting and how they're targeting those people.
yeah. Yeah, that makes a lot of sense. So in regards to, account sizes, do you guys, plan to make bigger accounts or smaller accounts in the future? Because I understand 5,000, well, in a trading sense, we can say it's small. Of course, it's not small to everyone, but do you plan to make any smaller accounts than that, or is it more of, let's say in a way a headache and just not worth your time or, you know?
Yep, absolutely. No, we do not plan on offering anything less than 5,000, not because it's a headache, it's because it's a cost thing, right? Each account type or each account purchase has costs associated with it, right? You got to pay the broker, you got to pay the monitoring and the tech fees, the payment processing. So a percentage or a fixed fee of $50 is much more than a fixed fee of $900, if that makes sense. So it's more about just the business side of it. Anything below that 5K mark, it just becomes unsustainable and really unprofitable.
Yeah, that makes a lot of sense. So, of course, that's the account sizes and everything done. So, in terms of the future, as I mentioned before, of my funded FX in specific, right? In terms of, social growth, let's say members, if we're talking actual numbers and stats now, is there sort of, milestone that you marked out? You want this amount of traders, trading below you, maybe a sort of goal you set when you started the firm or a few months ago. Is there anything, of course, any milestones you've already hit or any milestones you're expecting to hit soon?
Yeah, I think for a firm, the biggest milestones are going to be the amount of payouts, right? Biggest milestone for a firm our size is getting to that $1 million mark in payouts, and we're pretty close to that. So I think we'll hit that quickly. After that, I think our payout trajectory is expanding pretty aggressively. So I'm hoping to do 10 million in payouts in 2023. I think that's realistic. It's achievable. As far as other statistics, I don't really think about it too much. Obviously, I would love to have 1 million followers on Twitter, but whether that's realistic or not is a different story.
Yeah, yeah, I understand. So I do see you tweeting about, all these small facts and figures all the time. That is very interesting to see. I know other firms do sometimes give a sort of outlook, a certain amount of traders make it past phase one, and often a certain amount make it to phase two and whatnot. So is there anything interesting, you can tell the audience today, something that maybe people don't expect?
Yeah, I think there's a little bit of a misconception, and I'm not sure if I'm just ignorant to the fact. But the My4X funds, the FTMOs, a lot of these firms will kind of float around these pass fail statistics associated with their firms of like 10% for phase one, 20% for phase two, and then like 7% for phase three. And I'm not sure if that's maybe a marketing thing or whatnot, but our statistics are nowhere even close to that, right? Each account size associated with our firm has different pass rates, obviously, and there's one
Yeah.
average. So we don't think about too much of the average pass rate because they're so different.
Yeah.
Like the 5K account, for example, has by far the worst pass rate of any of our accounts because
Mm.
it's skin in the game. You have low skin in the game, low risk, so you're just going to go all in and you're likely going to lose. Now, on contrary, our 200K account has the highest pass rate. So you have more risk. The more experienced traders are using the 200K accounts. So that's something you kind of have to factor in when you're planning out your cash flow and your risk management kind of practices. Um, but our pass rates are much, much higher than what we are seeing other firms release or
Yeah.
some firms release in the industry. And so I think there's a maybe a disconnect or maybe a statistical anomaly, maybe. But yeah,
Yeah.
I think that's the biggest thing that surprised me.
Yeah. I think, as you mentioned before, as you do get more members, the actual stats and the results will start to average out, and maybe, who knows, the results will come down and start matching the other firms. But if they don't, that is very interesting. um of course, basic psychology, what you said makes a lot of sense, right? The biggest account, that's going to be people who are confident in their trading, potentially have passed on other
Right.
accounts and then come to, the bigger accounts. So it makes a lot of sense for them to go for those large 200K accounts and then to go ahead and pass them. Um, Today I saw you tweet something very interesting, and this, it's not something that I pay thought to, but it is interesting. You said that women are much better traders than men. So what's the whole story behind that? What sort of figures and facts made you say that?
Yeah, so it's some of the data we've been digging into, and when someone signs up, we don't ask for gender or anything, so it's kind of an assumed research or study that we're trying to do just to get a better picture of what strategies are working, who's doing better, if there's a country anomaly, right? So we look at what countries are trading better than others. So that's kind of an interesting study that we're trying to look into. That tweet came from the fact that although women represent a much smaller portion of our traders, I think it's only 10% versus a 90% male audience, roughly, based on our sample size. They have a 2x pass rate compared to our male traders, and I'm not sure if that's because female traders are just have more mild manner, if it's a behavioral thing, if it's simply a risk thing. But just from my personal experiences with having two sisters, is I believe it, right? Guys have temper issues. They have emotional things where they might do something that they shouldn't, and I think that translates directly to trading. Whereas a female trader might handle things a little bit better, a little bit more different, calmer under pressure type thing. So that tweet just came from the fact that we are seeing a 2x pass rate average versus men, but a much smaller sample size, if that makes sense.
Yeah, 2x is kind of crazy. That's
It
a
is
lot better
crazy,
than
very
men.
surprising.
Yeah. I guess so in a way, let's say that stereotype of men sort of having pride and ego in a way, right? I think that does transfer to the markets, of course, not in that same sense, but maybe a lot of people are out there revenge trading. Some people can't really stomach their losses, so they're just going back at it, trying to make it back. It's that constant cycle. I'm sure everyone listening has been there at some point, when you're starting out. It's a very vicious cycle to go through.
Yep, absolutely.
So you mentioned the countries. So with that data, is there anything interesting that's come up so far? Is there any countries that are doing much better than other countries?
So we haven't gotten through the pass rates too much to fully answer that question. One thing that we do have discovered is that countries are very segmented in what they are trading. Without having the data in front of me, I can recall that certain countries would trade like 80% of their traders would be heavily involved in gold, or a certain country would be 80% Nasdaq or 80% GU or something like that. And so it was a bit surprising to me, and I'm not sure if it was because the group of people all came from the same place, or if it's just kind of like the example earlier in the US, we grew up trading stocks, but maybe in New Zealand they grew up trading oil. So it's very there's so much behavioral activity and behavioral data associated with prop firms. You could really dig into anything. But that's something I just found interesting is that each kind of country has their own pass rates as well as their own like most profitable asset. And they're all different. It's kind of crazy.
Yeah. So with all this data that you collect and you put together, is there a sort of purpose behind this, or are you in a way just doing it for fun because it's interesting? Because it is definitely very interesting, but does this data, sort of go anywhere into helping the growth of the business or you know anything along those lines?
Absolutely. And data is a huge portion of a prop firm business. Every decision that we make in any firm that should be making is data driven, right? For example, if you're changing a rule, you need to know prior to that rule change, how is that going to impact your pass rates, your copy trading, your risk, your potential payouts. All of these kind of go into the cash flow of a business. So data controls that process. So, for example, if your average days to failure is a certain number, like super low, like your average days to failure is 3 days, 4 days, then maybe removing a rule associated with minimum trading time is really not going to do anything, right? Because people are failing either way.
Yeah.
That's just an example. If there's like people have free retries, right? Like we used to have free retries before we changed the rule to no unlimited trading time. And in reality, we were only seeing about 1%, 2% of people actually getting to that retry stage. So for us, it was just almost a no-brainer to just let people do the unlimited trading time. We might have a slight change in our pass rate, but really nobody was getting to that point. If you were going to fail, you were going to fail in probably 6 to 7 days. If you were going to pass, you were going to pass in probably 9 to 12 days. So those statistics help drive the decisions we're looking for, if that makes sense.
Yeah, yeah, that makes sense. So with, these sort of, let's say, consistent figures that show where people are passing or failing, rather, how, do you intend to, sort of tell people, help people with it in a way? So I guess what I'm asking here is, right, looking at all the data where all these traders are failing. So what are, of course, you mentioned the time aspect of, 4, 5, 6 days, people are rushing it. Where are people failing? Are they over leveraging? Are they trading news? News, of course, is a big factor. A lot of people, I guess, in a way, gamble on news. They wait for the drop of CPI, NFP, or whatever, and most of the time, people are probably getting eaten by slippage. So You know,
Yep.
how is that working in the background? Where are people failing? What sort of advice would you give them if they, really want to pass? What do they need to change?
Absolutely. That's a great question. And I see time and time again the two main strategies that are failing the most accounts. The first one is, like you said, there's news traders. This can be an earnings event. This could be CPI, FOMC, NFP. It could be uh, British gas prices. It could be anything. And people just assume that they can predict it. And if they don't, they lost a challenge. If they do, then they maybe gain 10 grand. Now it's easier said than done because there's likely an initial move that creates a trap or a failure in most cases. So your stop loss gets hit, slippage takes you out, spreads get you, and these are all things that brokers create to reduce their risk. But they just think that the risk reward is better if they can just trade news, and 90% of the time they're just going to fail. The other major one is people who choose to trade with an average down strategy. Now, it can be, you can call it martingale, you can call it basketing, you can call it anything you want. Now, successfully implementing this is a different story, but 90% of the population that does a average down strategy is simply just taking a sell position into a bullish trend, keep selling, keep selling, keep selling, and by the time it reverses, the drawdown limit already took them out. Now that by far and above is the most reason for failure is people trading a trend reversal, trying to catch the top or the bottom, and then averaging down and just get taken out by the drawdown limits. So
Yeah.
it's that one's number one by far, and then the second would be the news trading.
Mm. Unfortunately, most of us retail traders don't have pockets as deep as smart money, so we can't hedge against the trend. Um,
Yes,
but I guess, having been there myself as a beginner, when you sort of trade, there's a lot of, like wishy-washy sort of belief behind it. You sort of just believe the trend is going to reverse it, it's going to happen. You start to convince yourself. So I feel like a lot of people probably do fall into that trap. Regarding, stop losses, that sort of stuff, in terms of people's like risk management, do you see a lot of trades getting set without stop losses? Because, to me personally, that's a must. But I do see some people, they set trades with no stop losses. And to me, that just makes no sense.
absolutely. And we do see, I think last time I checked, it was about 75% of the traders do not have a stop loss. Now, I'm not sure whether or not they have one at any point in the trade, but they did not, they closed the trade without a stop loss. So I do think a portion of that is people use a mental stop loss by a market order because they think they'll get slipped or something like that. But I do think most people don't use a stop loss because they trade the average down kind of strategy. Now, most successful traders that we see use a kind of 3-to-1, 4-to-1 risk reward ratio of like a 0.5 to 1% risk. That's where I think the sweet spot is. Whether you want to average down at 0.25 and do another 0.25 trade, that's fine. But you got to have that risk management practice and principle to know when to get out. The hardest part with that, obviously, is when you get out and then it reverses into your favor, and that's just kind of creates a bad mentality. But most of the traders that do fail are trading without a stop loss. So that's something that retail in general needs to work on.
Yeah, 75% is, it's a very, very high figure. And then knowing that even of the 25% that use them, some may not be using them correctly because from my experience, a lot of the retail indicators that provide stop losses, the stop losses usually aren't at a point of invalidation. So,
Mhm.
well, it depends how you trade, right? It is all perspective. But I think people kind of sometimes set themselves up for failure putting stop losses in place. Another big one, I'm not sure if the data would show it, is probably moving stop losses. I know I used to do that at some point, and I've seen other people do it. So it's yeah, I think, with people and prop firms, there is that excitement in a way. Okay, I'm putting in a little bit of money. If I pass this, if I get my first payout, it's gonna be amazing. So in terms of, let's say repeat customers, people that come and then repeatedly fail, ha- is that a usual trend? Is there people, failing a certain amount of counts before they pass, or are the sort of people that pass just passing, just naturally, it's just happening, they don't really have too many failed accounts? Do you have any stats behind that?
Um, no specific stats. I will say that we do have a group of people, obviously, like most firms, that purchase just astronomical amounts of accounts, right? It could be 5Ks, it could be 10Ks, 25Ks, but they kind of use the law of, okay, eventually I'm going to get a payout. So they might purchase 30 accounts, but they might get three payouts. Now, whether or not that covers the full cost of their fees is yet to be seen, most likely not. Usually, the group of traders that succeeds the most are the ones who maybe purchase two or three accounts per payout. So they'll purchase three 100K accounts for 3 grand, but they'll end up getting a first payout of 10 grand. Now they might get another payout of 10 grand, so they're up 20 and they paid three. So most traders do not successfully get to a payout on their first challenge. Now, unless they've done them somewhere else before they went with us, but most traders do not. So the best ones that we've seen that have been the most successful will kind of have like it's almost like a risk reward strategy for trading, but also for account purchases. So they've got like a three account risk and a two payout reward kind of thing. If that makes sense. I know it's a weird way to put it, but it's what we see.
Yeah, yeah, definitely. I think, it is good for people to hear this because like you said, before we even started recording, people have these big misconceptions about how things work. And they probably have this idea, if you keep failing, eventually you're gonna win. But in reality, the way it is, the people that are winning are probably very, methodical, logical, and they have a system that allows them to win and do it consistently and repeatedly. So out of curiosity, right? Before you created MyFundedFX, were you funded with other prop firms or had you, even tried?
Absolutely. I've tried most of the large ones. Before my funded FX, that was kind of created my initial interest, obviously. I was very intrigued by this whole concept of getting funded. Didn't really make a whole lot of sense to me at first. But yeah, I've definitely been funded with quite a few. I have my own preferences. I mean I think there are some great companies out there and great offerings, great services, etc. So yeah, I definitely tried them out myself just to see kind of what the market was looking like. What was the offering? How do they treat their customers? What was the rumors, the pros and the cons actually true? And I kind of incorporated that into my own firm to see how we could kind of take the pros but get rid of some of the cons maybe.
Yeah, that makes a lot of sense. So now, now that you are a bit of an established firm, are you by any chance in contact with, the owners or the CEOs of some of the other firms?
Yeah, I think it's kind of like a status thing, right? Like if you're in the big boys league, if you're in the major leagues, then you can maybe talk to each other. Like if FTMO and my Forex funds wanted to communicate, or like E8 or something. I'm probably in the minor leagues, and then there's maybe a league or two below me. It just depends on how you look at it. But yes, to answer your question, we do communicate. I have several firms that I work with on a regular basis. Most of that work we do together is to identify fraudulent behavior, whether it's chargeback fraud, whether it's reverse trading multiple prop firm accounts.
Yeah,
So like taking a buy in our firm and taking a sell in the funded trader kind of thing.
yeah,
So that's something we look out for. We're constantly reviewing and helping each other. Although we are competitors, ultimately we are trying to establish an industry that has best practices, that follows the rules, but also looks out for each other. So there are quite a few prop firms that work together. I can't really speak on which, and I don't know others who work together, but it's just my personal experience, and it's been very helpful. Like helping out with issues, concerns, partners to work with for payments or anything like that.
yeah,
It's kind of like a community. So it's been
yeah,
great.
yeah, that's good to hear. So is the fraud and that reverse trading, that's actually the first time I've heard about that. Now that you mention it is a bit of an interesting idea. Is that a big issue or is it just, something that happens here and then and you guys pick up on it?
Yeah, so chargeback fraud is obviously there at every firm, and it's for those who don't know it, it's basically when someone purchases an account and then they fail or they don't like the service, which is usually because they failed. They will tell their credit card company that someone stole their card and purchased the account for them, and it's not actually a purchase they made. That is chargeback fraud, right? Because you did purchase it, but you are committing fraud by saying I didn't. Now that cost gets passed on to the business, so we have to cover that cost, even though you use the service. So that's why it's kind of an issue financially speaking. It is an issue, but it's not like a huge issue. It's just something firms have to deal with. And we're constantly looking at reasons for how we can pre-identify fraud, like actual stolen cards or people who have a history of chargeback fraud, stuff like that. Now, the other one, which is probably more of an issue, is grid trading or reverse trading to prop firm accounts. So, for example, if I'm at the funded trader or if I'm at E8 and I have a funded account and I'm taking buys on CPI, right? It's not against the rules to take a buy. And I'm one-sided trading the news. And then I go to MyFundedFX and I have an account and I take a sell. Now, if CPI is moving 500 points and you're going to win one of those, you might lose your funded account on the other side, but you might make $50,000 or something crazy on the other account. So that's what we're starting to see in the market is people are trying to game the system and use groups of people in specific countries mostly that are trying to game the system enough where it doesn't matter if they win or lose as long as they win in one of their accounts, if that makes sense. So that's something we constantly have to deal with and look out for, and try to prevent as much as we can.
Yeah, that's it's a bit of a hassle, but I guess the people that are pulling that off, very, very smart to, kind of think of that, I guess. Not great.
It is smart. People think of a lot of things. If you give them enough time and resources and they'll find a way to do something.
Yeah, yeah. And I'm sure for some people it has worked in their favor, but stuff like this, if you guys are cracking down on it, it probably won't last around, for a long time. And eventually you probably will stop most of it, which is good. So, you know, to sort of wrap up this podcast slash interview today, just wanted to ask you if you have, any general advice for the traders out there. You yourself, you are and have been trading for a while. Now you own a prop firm, so you're seeing this trading industry from a very, very different, sort of bird's eye view angle. So is there any big, last advice that you leave to all the traders that are tuning into us today?
Absolutely. And I think the biggest thing is prop firms are a good resource. They're a good training resource. I would find a firm that fits your style, whether you are a 0.1% risk reward, go for a firm that has unlimited trading days. If you want no trading days and you want a 1 to 10 risk reward, then go for a firm that offers that. Go for a firm that has consistency rules, but maybe it's cheaper and you're fine with those consistency rules, then go with that. Each firm kind of has their niche that they're looking for, and your trading style likely fits in better with one of the firms based on the rules that they offer. The other thing is I would recommend starting with the smallest accounts possible. Like our 5K account, although the pass fail rates are very bad, it's a stepping stone to learn and practice how you can actually behave with a funded account. So a lot of the time we see people go straight for the biggest account, the 100K, the 200K, the 300K. They don't have trading history or background. They don't have the knowledge or the experience, and that's just not something we recommend. If you really want to be a successful trader, trade demo, then go into the smallest prop firm account possible. Find the prop firm that fits your trading style, and then just keep trying. Right? You can trade an actual brokerage and lose $10,000, or you can go to a prop firm and fail 50 accounts. But during that 50 accounts, I'm hoping you got a few payouts. So that's kind of the whole thought process that I have.
Yep. I hope people appreciate that advice. It's very big advice coming from someone that actually owns a prop firm, so people definitely should be listening. Um, I'd like to thank you for joining me today. This was a very insightful podcast, very different to my usual guests, as I mentioned at the start, and I'm pretty sure everyone listening has learned something new. I definitely have. For everyone listening, make sure you like, comment, subscribe, the usual. I will leave all of Matt's links in the description on YouTube, including his Twitter and his YouTube. So make sure you give him a follow on Twitter and go subscribe to his YouTube as well. And like I said, I hope you guys have learned a lot today, just like I have. And I'd just like to thank you once again, Matt, for jumping on today.
Yep. Thank you. It was a pleasure.